This is Back Roads of Illinois, server to farmers and ranchers in central Illinois and the Midwest. This is Back Roads of Illinois, server to farmers and ranchers in central Illinois and the Midwest. We're glad you're here on today for our program on Back Roads of Illinois. I am Cesar Delgado on today. I hope you enjoyed your Thanksgiving and the cold blast for this week in the Midwest and the Northern Plains. We were talking about the commodities markets with Tyler Schau from agmarkets.net. I will be in Chicago for the Illinois Farm Bureau for annual meeting in Chicago at the Hyatt Regency. This been Back Roads of Illinois. I hope you enjoyed your Thanksgiving and the cold blast for this week in the Midwest and the Northern Plains. We were talking about the commodities markets with Tyler Schau from agmarkets.net. Hey Tyler, how was your Thanksgiving and your family?
Thanksgiving was a little cold, and we got probably about a foot of snow total throughout the week. We had a blast early in the week, another blast of snow Friday following Thanksgiving, so we had to do a little digging out. But it was good. Just kind of got to hang out, and things are finally slowed down a little bit now that it is getting cold and snow flying. So it seems like all the outdoor projects dried up. So we got to spend a little family time. It was just my wife and daughter and myself and my wife's parents that got together for Thanksgiving. And then Saturday, our sister and brother-in-law and nephews, we all got together. We had to work some cattle that we owned together. So we did a cattle drive in about 5 degrees below zero wind chill and drove some cattle home a horseback and got them worked and branded and sorted and so yeah, we had a good weekend. Spent some time with family. It's always good.
It was nice. We got 8 inches of snow in central Illinois and watched some football.
There you go.
Right.
Tyler, let's discuss about the grains markets, especially with these trade numbers from last week in the corn markets. How are they are in the corn markets?
Corn started off this week a little slower. We traded down a couple cents today. It was after a pretty good close to the week. We came in the day before Thanksgiving on Wednesday and had an 8 cent up day in corn. And then followed that off. A lot of people thought maybe we'd see it break a little following Thanksgiving. We had a 2.5 cent up day. We basically just gave those gains back from Friday. We're kind of trading where we were pre-Thanksgiving. I wouldn't say we got just a ton of great information out there about where we're headed next. There's really two camps. It feels like there's kind of the bear camp that's entrenched on this. Yields are high, production was good, and we're not shipping enough out corn, beans, or wheat to alleviate the oversupply problem that we've got. So there's kind of a bearish camp out there that's really arguing that prices need to come down, and there's no reason for them to be this high. And then on the flip side, you got a bullish camp that's maybe saying, hey, the yields did not come in nearly as good as what's being pitched right now, or what the USDA said in their WASDE report a few weeks ago. Exports are good and are going to continue to be good. And there's a group of people that still think China is going to come to the table in a meaningful way, and we're going to see those exports to China on soybeans, which would be friendly to the soybean market. So until we get some type of direction that tells us which one of those sides is correct, I wouldn't be surprised we don't just kind of dance around here. And that information, I would guess, on beans will come out sooner rather than later. Corn, it might take a month or two to tease out.
How is the fundamentals on the corn markets on this morning?
Fundamentals on corn, the earlier today, we got some export sale reports, as long as, excuse me, as well as some inspections. I would say in fundamentals, it may be a little bit of disappointment and just a lack of flash sale reports, not the government's back up and open. Um, I would say the export sales data that was released this morning was, I wouldn't say it was bad, but it just wasn't all that outstanding, I guess is probably the best way to put it. And then again, one of the problems with the data that's being released now is it's old data. The export sales that was released was data that covered up to October 23rd. Well, it's December 1st. So, I wouldn't say it's old news. It's just not enough to really drive the market one way or the other. I think what's going to be important is if we see some flash sale information popping up between now and the next few weeks.
Yeah, it is pretty good for export from this morning.
Yeah, I mean the report was good. I'm not downplaying it, especially for corn. It's just a matter of um, you know, for inspections, which we've been getting. And the inspections, by the way, were as of November 27th. We had 1.4 million metric tons of corn. We expected 1.1. So that was really good. Soybeans, we were 920, which we were expecting over a million. That's what I would say is maybe disappointing. And then wheat, just poor inspection data, 384 million metric ton, or 384,000 metric ton, which we were expecting 500,000. So disappointing on the wheat numbers for sure.
How about the technical buying in the beans markets for right now with China deal on last week's ago?
Well, technicals in beans, I mean, it from kind of a short-term perspective, and I'm talking the last month, I would argue technically we're still supported here. And anything on a pullback down to the 11.18 to 11.14 area over the next week, anyhow, I would consider us to be in a short-term bullish move, and technically we're still good. I don't think we've done anything to damage any charts as far as beans go. Now we go plunging on January beans down below that 11.15 area, and then take out $11, then I'm guessing, now you've got to be worried about that gap that we left late October from 1063 up to about 1068. So there's a pretty meaningful gap there on January down below the market. This deal falls apart. If we don't see China buying, I could see the technical selling come into the market and force this thing down. I think it's going to require some type of fundamental catalyst to do that, and that's going to have to be either just the weather turn really, really good in Brazil and erase any production issues in South America, or relations with China freeze again, and we see that promise to buy 12 million metric ton by the first of the year, early 2026. We see that go by the wayside. If any of those happen, I think the technicals break on beans, and we're probably looking at significantly lower numbers. But for right now, I would say technically the market's supported. We might see, we were down 8, 9 cents today, not the end of the world. We've been down here just last week, and we caught a bid and pushed higher. So,
What is your position on the fundamentals on January beans for right now, Tyler?
fundamentals, January beans is just what I kind of alluded to. We need to see China continue to come in and buy. They have been buying. I think the tracker is a little over 2 million metric ton of the 12 million they promised to buy. So they got some work to do. There's time to do it. The worrisome part is the fact that that window really dries up once we get into January, February. So we really need to see some grain start pushing out. The other problems we've got, I would argue, is you've got some low water levels. in the Mississippi that's going to, start to create some issues for transport down. You've got the upper Miss that is starting to look at freeze up coming on sooner rather than later. And, we've been pushing a lot of corn out to the P&W, so that's taking up rail space for beans to hit the P&W to go to the export market. So there's some headwinds there. It's going to be difficult to push the beans out the way I think a lot of people would like to see it done. Won't say it can't be done. Would never say that it can't be done. Just going to be a little bit more challenging than maybe we've seen in the past.
We will see for the funds on January beans.
Yeah, the fundamental or the funds, the commitment of traders super lacking. I mean, we didn't get a report on Friday because of Thanksgiving. I think the next report comes out tomorrow, but that's for like late October. So, I mean, it's pretty delayed. And I'm not discounting it. I'm not saying it's not important to just not nearly. It'll be nice once we get all that caught up and we get timely information.
Our cattle is on Weight Watchers right now.
They probably should be. It's been impressive. It was difficult to think they'd be able to push weights up again after last year, and they continue to just drive the carcass weights higher and higher. It's a testament to the genetics, the feeding efficiency, and just the overall product that we produce. The one thing I've been saying when I speak to groups of cattle growers is the one really good thing that cattle producers have done in the last decade anyhow is they've created a product that can't be replicated really anywhere else in the world. We produce mostly choice and prime beef, and the consumer has developed a taste for it, and that's evident. You go out to a fancy restaurant, a steakhouse, it's hard to find a seat, and even though the prices are a little bit eye-popping, it's still in high demand, and it's in high demand because it's a good product that tastes really well and very healthy and nutritious.
Wow. Of course. How are the fundamentals on February cattle markets right after the Thanksgiving holiday?
Well, February fat cattle, I mean, the fundamentals that have been a little positive just because of the snowstorm that's come through. If you think about what's going on, there was ice and snowstorms that went through a large portion of the Midwest and caught a lot of the cattle feeding country. Oklahoma was having heck. Had a bunch of cattle that were supposed to sell at Oklahoma City today, and it was tough to get there. It was icy and roads were pretty nasty from what I heard. So, but anytime that type of weather goes through cattle feeding country, it just becomes harder to get cattle to pack on weight. I think that's maybe some of the buying we saw late last week was just kind of anticipation of this storm, push prices higher. We had a little bit of a setback today. But I would say from a fundamental standpoint, yeah, there's still going to be a lack of cattle. I still think the shorter supplies are ahead of us in the fat cattle space, maybe over the next few months. So that should keep this thing supported. Just the lack of available animals. Obviously, we took a hit last week with the closing of the plant in Lexington, Nebraska, and that maybe changed some of the attitudes for what that shortness of supply might do. You just cut back on demand with less chain space out there. But at the end of the day, we still got we face low numbers of animals, and that hasn't changed.
What is the forecast for next couple days in the Dakotas and Nebraska, Minnesota?
We're actually going to warm up. No real precipitation issues till next weekend. Over the next few days, so we're going to get above freezing. So we should melt off some of the snow we got. I think they will in the southern plains as well, and it looks decent over the next week.
How about the lean hogs markets today?
Lean hogs fell back a little bit. Had a good little run there on Thanksgiving week. Posted a low. The Friday, the 21st, came in and rebounded. We were actually up, oh, I don't know, $3 or $4 on lean hogs. Kind of had a setback Friday, a little bit of a pullback again today. It's not uncommon to kind of see hogs bottom out this time of the year and maybe start a little bit of a rally into the first quarter of the new year. So it might be a friendly look at hogs right at the moment, but no real news driving that market that I pay too much attention to. But bear in mind, I'm in Western North Dakota. We don't grow very many hogs out here, so don't have a lot of customers that are hedging hogs.
What is your final thoughts about the corn market and the beans market?
Final thoughts is just I feel like I'm a broken record. If you haven't made very many sales, the market has given us some opportunities to make some catch-up sales since putting in a low there in August and then a secondary harvest low in mid-October. March corn's up at 445. Don't forget to look at new crop corn pushing up around 470. Yes, they've both come off of their highs, but we're not far off of those highs. We're within, 6, 7 cents of our highs. Well, 10 cents in March corn, anyhow, from post WASDE report there a few weeks ago. So don't be afraid to make some catch up sales if you need to free up some cash. If you're looking at making some sales and you're trying to reduce cash income in the calendar year, don't be afraid to look out first part of next year. It's very dependent on where you're at. If you're in the Corn Belt, there's been quite a few stories of them pushing nearby basis, so that's one to pay attention to. If you get a push on basis and it pushes cash price, I've heard some places going to even the board. Heard a few positive basis getting floated out there. Most of those, just for your listeners to know, get filled within the first hour, so you don't have a lot of time to think about it. If you're out where I'm at, we're not seeing that. In fact, we're seeing pretty poor spot basis, with the deferreds being your better strategy. So we've been after our producers out here in Western North Dakota. Go ahead and on futures rallies, get some sales booked for the first quarter of next year while basis is strong. We think that poor basis will just continue to roll forward. That's just a function of a lot of crops sitting in bins and bags and on the ground out in the western part of the country.
Thanks, Tyler. I enjoyed our conversation for today. Stay warm.
Will do. You too. Always good to visit with you, Caesar. Take care.
This is Tyler Schau from agmarkets.net. I am Caesar Delgado on back roads of Illinois. You have a good day.